And our next presenter is our title partner, Urban Catalyst. So I'm going to bring up Erik Hayden. There's Erik. How are you doing today, Erik?
I'm doing great, Jimmy. So happy to be here.
Fantastic. Happy to have you here with us today. Again, as always, we got a little peek behind the curtain into your real office there for a second.
You sure did. Today, I'm here to talk about Urban Catalyst Fund 2. Urban Catalyst, we're structured a lot like a traditional equity fund. We're focused on doing ground-up development projects in downtown San Jose, California. And of course, we're also an opportunity zone fund, and that allows us to give the opportunity zone tax benefits to our investors. Just to kick us off, we've been featured pretty prominently in the news over the last few years. We've had over 250 news articles written about us, really just a lot of positive buzz about what we're doing here in downtown San Jose. Probably most important of these, we were named by Forbes magazine as one of the top 20 opportunity zone funds in the country. So, nothing like getting a little national validation from Forbes that we're doing things the right way. So, in order to get the tax benefits associated with the program, investors need to invest capital gains. So this is just a little background on the program itself. Three most common ways that people have capital gains events: the sale of stock, the sale of a business, the sale of real estate. And then, of course, once they have that capital gains event, they have 180 days to put their money into a qualified opportunity zone fund to get those tax benefits. We just don't want anyone to miss out on that timeline. Then there are two major potential tax benefits associated with the program. The first is investors are able to defer paying capital gains taxes on that initial capital gains event until they pay their taxes in 2027. So you get to defer for a while. The second benefit is much better. After an investor's money seasons in an opportunity zone fund for 10 years, all of the profits from the fund itself are tax-free from a federal capital gains perspective. So what that means here at Urban Catalyst is we're going to build these buildings, lease them up, hold them until we get to the end of that 10-year mark. And then we're going to sell the buildings and liquidate the fund, because that's when we're able to provide the majority of the profits to our investors. And of course, those profits are tax-free. Just taking a step back here in the Bay Area, San Francisco Bay Area, here are the opportunity zones in green. Obviously, for this fund, as I mentioned, we're focused on San Jose and even more specifically downtown San Jose. You can see there are 4 census tracts that are opportunity zones that cover almost all of downtown. And it's interesting, when I first started Urban Catalyst, my whole plan was to create a real estate equity fund to do ground development projects in downtown San Jose, mainly because of the overall macroeconomic trends throughout Silicon Valley, all pointing towards downtown San Jose as the next place to do development on a large scale. It was only after I formed Urban Catalyst, or just started forming Urban Catalyst, that I learned about the Opportunity Zone program, and that everywhere that we were planning on building these buildings was located in an Opportunity Zone. I thought, well, wouldn't it be great to be able to give my investors these additional tax benefits? So that's how we became an Opportunity Zone fund. And, when I talk about the macroeconomic trends here in Silicon Valley, what I'm really talking about is tech migration. So here is Silicon Valley. Obviously, everybody knows lots of big tech companies here in the Valley. For this example, I'm just going to talk about these 5 companies, which by market cap are the 5 largest companies in the United States. 3 of them have their headquarters here in the Valley. 2 of them have a major office presence. So here in Silicon Valley, Palo Alto, Menlo Park, and Mountain View right here. This is pretty much the center of the Silicon Valley universe. As these 5 companies have grown over the last 20 years, they've expanded their office footprint, where they're located, but also all over the country, all over the world. But here in the Valley, Palo Alto, Menlo Park, Mountain View, not really very big cities. So what we've seen here in the Valley a slow migration southward, primarily into the city of Sunnyvale. And to give everyone an idea of just the scale of this, currently here in the city of Mountain View, Google leases 95% of the office space in the entire city. And very similar in Cupertino, Apple leases 85% of the office space. Now here in the city of Sunnyvale, Google and Apple combined have more than 50% of the office space. So this has been great for Sunnyvale. They've seen development go gangbusters for over a decade, but now Sunnyvale is almost completely built out. And so the big question on everybody's mind, especially for us when we started Urban Catalyst, was where's the next place these companies will continue to expand? And we thought, well, obviously it'll be downtown San Jose. But now, flash forward a couple of years, We can say all of these companies have expanded into downtown San Jose because Microsoft and Apple have taken big land holdings in San Jose. Amazon has an office in downtown. Really, the big story has been Google, and I'll talk a little bit more about that. Meta hasn't quite made it to San Jose, but they did just last year in Q4 take 1.2 million square feet in the city of Santa Clara, about 5 miles from downtown. So definitely fitting in with the tech migration trend. Now, downtown San Jose, we've been developers for a long time, doing projects all over the Bay Area, lots of them in Silicon Valley and in San Jose. But downtown San Jose really has the three things that we want to see when we do development anywhere. The first is we want to make sure there's a demand for all the different types of projects that we're building. That demand here is really generated by the Silicon Valley job engine. The next is we want to do business in a place where transit and physical infrastructure are already in place. Downtown San Jose is really the only true urban environment in Silicon Valley. Diridon Station, it's a massive multimodal station. It's slated to be the largest train station on the West Coast. It already has Caltrain, which gets you up to San Francisco in about an hour. And now BART, which is the largest mass transportation system here in the Bay Area, is now fully funded to connect through downtown San Jose into Diridon Station. And then San Jose State University, with over 35,000 students, it's the second largest university here in the Bay Area behind Cal Berkeley, and it's right in the heart of downtown. And finally, we want to do business in a place where the local government wants to see development happen. And that is not the case in a lot of California cities, but it's absolutely the case here in downtown San Jose. The government, they want to see high density development and they want it now. This is a picture of my partner, Josh, and I with the mayor of San Jose, Sam Liccardo. He's been the mayor for 8 years. Before that, he was the council member representing downtown for 8 years. It's really the policies he's put into place that have streamlined the pre-construction process, really attracted developers like us into the downtown core. To give everyone an idea of just the massive revitalization that's happening in downtown San Jose right now, I like to show this before and after. So here's the current skyline in San Jose. If all of the projects that are currently in the planning process are built out, say over the next 10 years, downtown San Jose should triple in size. There's quite a bit of stuff going on. You can see Urban Catalyst Fund 1 and Fund 2 projects there in red. To continue talking about the local market, here's my two-dimensional map. This black line here, this represents the opportunity zone. Our headquarters is right here, so we're located right in the zone. We're right next to Adobe's world headquarters and Zoom's world headquarters. Adobe's actually just completing this 1 million square foot office high rise right next door to us. We got to watch that getting built. And they also just announced they'll be occupying that with 3,000 employees in Q1 of next year, which is always good to see. Also kind of interesting, we share a parking garage with Zoom. About 2 months ago, all my employees started complaining that there was nowhere to park because Zoom was back in the office. We kind of thought if anybody was going to work from home forever, it definitely was going to be Zoom, but nope, Zoom is back. Here's San Jose State University. That new BART line I was mentioning, here's where it's running underneath Santa Clara Street station here downtown, and then connecting into Diridon Station, that big train station I was talking about. Now, as I mentioned, the big story over the last 5 years has been Google, and I'll give you guys a brief summary. Google has acquired over 80 acres worth of property here in downtown San Jose. Their plans that they had approved at City Council last year show them building roughly 7 million square feet of office and 6,000 residential units. At build out, this will be Google's largest campus on earth. Google started construction on this campus last month. They're planning a 10-year, $19 billion build out. So really exciting stuff. To give everyone just an idea of what this means to downtown San Jose, San Jose, we're the 10th largest city in America, over 1 million people. The downtown core has about 100,000 people. This campus alone is expected to bring between 40 and 60,000 people to downtown San Jose every day. So pretty exciting stuff, but Google isn't the only story in town. We've also seen developers flood into downtown over the last few years. 3 really notable ones: Boston Properties, J-Paul, West Bank, and then our newest addition, of course, Hines. These 4 groups over the last few years have spent more than $1 billion acquiring property in downtown San Jose, and they're planning on doing millions of square feet of new development projects. Kind of like to highlight J. Paul's almost complete with his 200 Park project. Boston Properties is about halfway done with this Platform 16 project. West Bank just broke ground on this 1.2 million square foot building. So lots of really cool architecture and great buildings coming in. And here at Urban Catalyst, we saw this wave of development coming, and our whole plan was to get in on the ground floor and acquire properties before they were scooped up by all the other, big developers and tech companies. And really, that's exactly what we did with the acquisition of our Fund 1 and Fund 2 projects. A little bit of history. Fund 1, 6 projects in Fund 1. You can see they're scattered throughout the downtown core. We had a variety of asset classes in Fund 1. A couple office projects, multifamily, senior housing, student housing, and a hotel project. For this fund, we raised $131 million in 2 years. We closed fundraising in December of 2020. And we're off to really a great start in this fund. You can see we're under construction with Paseo. We just broke ground on Gifford. We plan to start construction on Keystone in January. We're going to follow that with Timber and the Mark in Q2 and Q3 and next year, and Fountain Alley in Q4. So lots of good momentum on our Fund 1 projects. Of course, today we're here to talk about our second fund. Second fund is located right here. You can see we managed to acquire almost half of an entire downtown San Jose city block. We really like this location. It's on Santa Clara Street. Santa Clara Street, where this BART line is running, is really the main drag of the central business district. It's right next to a future BART station, really making it the epitome of transit-oriented development. And it's across the street from City Hall. And of course, here's what Fund 2 looks like. There are 2 projects in Fund 2. On the left is Icon. Icon is a 500,000 square foot office building. On the right is Echo. Echo is just about 400 units of multifamily apartments. Here's a different view of those 2 projects. And when I talk about these projects, what I like to talk about is the demand as to why did we decide to build these asset classes in this location at this time. I'll start here with Echo, our multifamily project. Multifamily here in California, kind of a no-brainer. We have a housing crisis. It's especially true here in Silicon Valley. And that's because we've created 6 jobs for every housing unit that we've built for over 30 years straight. In fact, our population only increases as fast as we can build new housing. Interesting statistic that recently came out. Here in Silicon Valley, if we wanted to build enough housing to have supply equal demand, we'd have to build 150,000 housing units. We've never built more than 5,000 housing units in a single year in history. So that's really how far behind we are. We have extreme demand for housing, and that generates high rents. It generates high occupancy levels. In fact, San Jose just got rated the 4th most expensive big city to live in the entire world. Our average home price is $1.5 million, and that's not for some mansion, that's for some 1960s ranch style 3-bedroom, 2-bath. Also, rent growth has been great. We're now 7% higher than we were pre-COVID for our multifamily rents. Our rents went up 10% last year. All the big houses, both Colliers, CBRE, Newmark, they all are forecasting double-digit rent increases over the next 12 to 18 months for multifamily. So the multifamily market is going great. Whenever we build multifamily, we like to build just fantastic amenities for our future tenants. This is our 8-story podium pool deck. You can see we have this nice infinity pool. We have these cabanas. In here, of course, this is a 2-story amenity space that wraps the amenities deck. Here's our indoor-outdoor fitness facility. This is our lounge, dining, and kitchen area. And over here, we have a game room and a movie room. Up on the 26th floor, this is our rooftop lounge. So we have some nice couches and fire pits. Inside, that's an office area for our tenants. This is their conference room that doubles as a dining room in the evening. Great views from up there. You can see all different directions. And then switching gears to talk about Icon, our office project. Office, really the big difference for us as developers between multifamily and office is here in the Valley, we can build office fast enough to meet the demand. However, there is still a pretty strong demand for office. There has been throughout the entire pandemic. In fact, one of the things that we've seen here in the Valley that's pretty interesting is that starting about July of 2020, the volume of existing office sales increased dramatically. Maybe it doubled or tripled at any point over the last 18, 20 months. We also were seeing these office buildings trading at either record or near record pricing, which is kind of the opposite of what you would think would happen during a pandemic when everybody was working from home. We really attribute that to Silicon Valley really being that safe harbor. So all the big institutional equity groups or big publicly traded REITs that have a mandate to invest into office in the United States, they looked across the country and said, where are we going to invest? And based on the strength of the companies here in Silicon Valley, they decided this was that safe harbor. Now, whenever we build new office, there are really three things we want to see. The first is we only build office in really great locations. I talked about how much we like this location in downtown San Jose, but San Jose's competitive market area is all of Silicon Valley. So how does downtown San Jose compete with all the other cities? And it really competes in two ways. The first is leasing rates for new office here in downtown San Jose are about 50% of what they are in Mountain View or Palo Alto. So significantly less expensive to lease office here in downtown San Jose. The second is if you wanted to get 500,000 square feet of office space in Menlo Park, you might be in 10 different buildings. So the ability to have one building for your entire office is a huge benefit that isn't easily found throughout the valley, but you can find it in downtown San Jose. The second thing that we want to see is what I call functionality. And that means, for example, we have the right amount of parking for this project. This is an 8-story parking garage. We have these really big floor plates. Every floor plate is 40,000 square feet. So that's almost an acre of net square footage per floor. That's what all the big tech tenants want to see these days. And really what separates modern office buildings in downtown from buildings that were built 20 years ago are these extremely large floor plates. We also have floor to ceiling windows, 14-foot floor to floor heights, really for that open, airy office feeling. We have tons of indoor, outdoor amenity spaces, exterior staircases, balconies, rooftop gardens, really to take advantage of the 300 days a year of sunshine we have in San Jose. It's just fantastic weather. And then the last thing is what I call architectural aesthetic beauty. And really that's just a fancy way of saying you have to have a good looking building. We utilize WR&S as our architect for this project. They're one of the premier architects for office here in the Valley. They just finished doing Microsoft's big campus up in Mountain View, and we're really pleased with how this design has turned out. What makes Urban Catalyst different than a lot of other opportunity zone funds is, most other funds, their plan is to go out, raise a bunch of money, and then look all over the country to find developers that have projects in opportunity zones so that they can form these partnerships. Here at Urban Catalyst, we like to look at Steve Jobs and Steve Wozniak, right? Did they go out, raise a ton of money, then hire someone to build them a computer? The answer is, of course not. They built a computer and then they took it out to the market. Really, that's exactly what we're doing here at Urban Catalyst. We are the developers of all of our projects. We have projects in our portfolio, and now we're taking those projects out to the market. Another thing I like to talk about with all of our potential investors is, when you hear about opportunity zone funds, you're hearing about these great tax benefits. And, don't get me wrong, we're big fans of the tax benefits here at Urban Catalyst, but if the biggest benefit you're getting is you're getting tax-free profits after 10 years, there better be profits after 10 years, or really what's the point of the entire program? So understanding the local market, the asset classes that are being built, and who the developers are that are building those projects, that's what matters. Here at Urban Catalyst, we see ourselves as a solid fundamental real estate equity fund and development company. We see the opportunity zone tax benefits really as just the icing on the cake for our investors. A little bit about me. I've been doing ground up development my entire career. I've done several $1 billion worth of projects in the San Francisco Bay Area, heavy focus in Silicon Valley and San Jose. In general, I build institutional quality and scale projects. That means I build large income producing buildings, typical exit strategy, selling out to a publicly traded REIT, large institutional equity group. We have 5 partners here at Urban Catalyst. We also now have 43 people that work here. And when I first formed Urban Catalyst, my whole plan, knowing we were going to be doing ground up development, was to create an all-star team of downtown San Jose developers. I did that by bringing on real estate experts and developers, Josh Burrows and Paul Ring. Josh is our Chief Operating Officer. I've known Josh for over a decade. He spent 9 years prior to joining Urban Catalyst working for I call them significantly large regional development company, large landowner and general contractor. He got experience just building a variety of different asset classes, significant focus here in downtown San Jose. Paul is our Executive Vice President of Development and Construction. I've also known Paul. I think I've known Paul for 15 years now. Paul, before he joined Urban Catalyst for 15 years, he was the head developer of a group called the Core Companies. They focus on multifamily and below market rate housing development almost exclusively in downtown San Jose. Paul now leads our team of 18 development and construction professionals that build all of our buildings here at Urban Catalyst. Of course, we're not just developers, we're also fund managers. Morgan Mackles, who I've known since I was in high school, he was a groomsman at my wedding. He's our head of investor relations, so really he's in charge of our fundraising. Morgan has spent his career building scalable and repeatable sales processes. He's done it for small and large companies, startups all the way up to Fortune 500. And he's the reason why we were so successful in our Fund 1 fundraise and why we're doing so great here in Fund 2. Then, of course, last but not least, I've got Sean Raft. Sean is everybody's favorite. He is our Chief Administrative Officer and General Counsel. So, of course, Sean's an attorney. He manages all of our financial consultants, our accountants that do our tax and audit, our fund administrator. He also does all of our compliance with the SEC and with the Opportunity Zone rules and regulations. Kind of an easy way to say it, Sean really dots the I's and crosses the T's here at Urban Catalyst. So these are the 5 partners. Combined, we've done over $5 billion worth of ground up real estate development here in Silicon Valley. You can see the heavy concentration of projects that we've done in downtown San Jose. Here at Urban Catalyst, we've been developers doing successful projects here in the Valley and in San Jose for quite some time. And now we just have an Opportunity Zone fund that we're raising to fund our projects. Now, wanted to switch gears to what I call the fun part, which is our project investment timeline. Every fund is a little bit different, so I want to talk about ours in a little bit more detail. We're in the middle of our 3-year fundraise. The fund will close in December of 2023, more than likely. It's a $200 million fundraise. We've currently raised just over $115 million, so we're well on our way to achieving our $200 million goal. Here in 2027, this is just a reminder to everyone. This is when you pay your taxes on your initial capital gains event, so we wanted to flag that. And of course, our plan is to wait 10 years and then sell the properties in 2034. Now, obviously, waiting to get profits in 2034, it's quite some time. We do plan on making distributions prior to 2034, the first time being in 2026. We're going to have a refinance event of our projects in 2026. Now, sometimes I call this Developer 101 because this is something we do almost every single time. We're going to start construction of these projects in 2023. They'll be complete here towards the end of 2025. Once they lease up and are stabilized, that'll happen in 2026. We'll go out and we'll get permanent financing. We take the permanent financing, we pay off the construction loan, and then any excess refinance proceeds, we distribute those to our investors. Right now, we are targeting distributing 65% of our investors' initial investment back to them in 2026 as a part of this program. And that is a tax-free distribution because it's a distribution of debt. Our overall goal is that we have a distribution prior to 2027 that is large enough that our investors can use that money to pay their taxes on that initial capital gains event. Now, of course, this is where my attorneys like me to say, there are no guarantees associated with investing into Urban Catalyst, and please read our private placement memorandum to understand all of the risks. Also, after our refinance event, we'll have these stabilized assets. They'll be cash flowing. We plan on passing through that cash flow to our investors throughout the duration of the hold period. Of course, before we have the big win, which is when we sell the properties in 2034. Now, another thing I like to talk about on this slide is what I call the third hidden benefit of the Opportunity Zone program. And it's specifically for funds that are structured as LLCs like we are. The nice part about an LLC is that you're able to pass through losses. And we plan on having pretty significant losses almost every single year throughout the fund, so investors could expect that on their K1s. In fact, a lot of our losses are coming from the depreciation of our stabilized assets. So, just like anybody that owns real estate, we depreciate the assets on the tax returns. The big difference for us, of course, is we pass it through to our investors, and investors will be able to use that passive loss to offset passive income. We should have significantly more losses than cash flow throughout the duration of the hold period, which, if offset, would make all of that cash flow tax-free. And then, of course, at the end, and this is what I call that third benefit. Typically, when you sell a real estate asset and you've taken depreciation and then you sell it for more than you bought it for, the government goes, hey, wait a second, and they make you pay taxes on that depreciation taken. They call that depreciation recapture. And that's something that all real estate investors really don't like. Specifically for opportunity zone funds, there is no depreciation recapture. So all that depreciation that is passed through to our investors get to keep it. So kind of as a recap, we're going to have this refinance event where we're expecting to distribute roughly 65% of our investors' initial investment back to them tax-free. After that, we have cash flow from the stabilized assets, passive income offset by passive loss, making that cash flow tax-free. Then there's no depreciation recapture, and when you sell the properties, you get tax-free profits. So overall, program's a pretty good tax advantage program. And then finally, we do have a bonus units program here at Urban Catalyst. This was really popular in our first fund, so we did continue it here into our second fund. Of course, the way that it works, if you invest into Urban Catalyst, what you're doing is you're buying units. And of course, you're paid out based upon the number of units that you own. We give bonus units in 3 different ways. The first is a time incentive credit. This is really to reward investors for earlier investment. Here we are in November, boy, time flies. 3.25% bonus units. That means if you invested $100 into Urban Catalyst, bought $100 worth of our units, we would give you $103.25 worth of our units. Next is our multiple ventures program. This is a loyalty rewards program. So this rewards investors that invested into Fund 1. They get 4.5% bonus units if they invest again with us in Fund 2. Finally, our volume incentive program. This is to reward investors for more investment. You can see our minimum investment size, $250,000. Bonus units start at 1% at $300,000, goes all the way up to $1.9 million. And then these 3 things add together to get your total amount of bonus units. As I mentioned, pretty popular program. Investors really do enjoy bonus units. And Jimmy, really, that's the end of my presentation. So if we have some extra time, I'm more than happy to answer some questions.
Yeah, we've got a couple minutes here, and then I'll kick you over to your breakout session, Erik. But I wanted to see if we could get to a couple of questions that came in from the audience today. And again, in case you're just joining us, this is Erik Hayden at Urban Catalyst. He's going to be stepping into a separate Zoom meeting in just a couple of more minutes. I just posted the link to that meeting in the Zoom chat. Click over there in a moment when we're done here, and you can interact one-on-one with Erik. But we got a question here from Jerry. Jerry asks, Erik, will rent control restrictions affect your projects?
The answer is the current rent restrictions are very minimal, so they don't affect our projects. That was
all right. All right, that was quick and easy. And then we got another one here about last night's election.
Oh, wasn't it exciting? Cindy Chavez
exciting
versus Matt Mahan, and it's looking like Matt is going to win. And I'm sure the question is, how does it impact our projects? Really, both Matt and Cindy are pro-development for downtown. So we, as a company, didn't particularly have a preference as to who won. However, just kind of as a side note, when we started Urban Catalyst, Matt was on our board of directors because Matt's a personal friend of ours. So we are kind of happy that Matt won. That was great.
Has that election been called? Matt won officially?
Well, he's up by 5,000 votes, and there's only 5,000 ballots left to count.
Okay, so it looks like he's in pretty good shape. I think it might be time to call that one then. We'll get to one more here because this question comes up a lot. The OZ reform legislation would early sunset or early disqualify certain high income census tracts, and it's believed that San Jose may fall prey to that provision of that bill. What are your thoughts there? Do you know if any of the San Jose census tracts are in jeopardy, and what happens with your fund if that's the case?
Sure, that's a great question. So we're talking about the proposed legislation that is expected to pass this year, but there's no timing. There hasn't been any updates. They said it was going to pass in November, so we've been watching that really closely because we're actually big fans of the new legislation. It does sunset or could potentially sunset some census tracts where the median income level is too high versus the rest of the country, which would disqualify 3 of the 4 downtown San Jose census tracts that are currently opportunity zones, including the 2 that all of our projects are located in, which is not a big deal for our funds. Our funds will be grandfathered in a number of different ways per the legislation. It would prevent us from starting future opportunity zone funds in downtown San Jose, more than likely. Now, I do want to mention, if we're talking about this new legislation, the 2 major benefits that it could provide for investors. The first is right now, everybody has to pay taxes on that initial capital gains event in 2027. The new legislation would push that out to 2029. So you get an additional 2 years, which is great. And then if investors had invested, say, in 2019, you got a 15% discount when you paid your taxes in 2027. So that means if you owed $100 in taxes, you would have only had to pay $85. That was really nice. It eventually went down to 10%. And then as of this year, it's at 0%. The new legislation would retroactively, going all the way up to the end of this year, give all investors that have already invested and any investors that invest for the rest of this year that 15% discount. And then next year would be the 10% discount. So that'd be a huge win. You know, we have over 800 investors across our 2 funds, Jimmy. I mean, we kind of want to send out a big celebration if this new legislation passes, because it really is a huge benefit for our investors.
Yeah, so we don't know today, and I did cover this at the beginning of the program, but for anybody who's joined within the last couple of hours, Erik's absolutely right. There's a possibility that if you invest in a qualified opportunity fund this year, you'll be eligible for that 15% basis step up. We don't know with too much certainty because we need this legislation to pass, and when and if it passes and how it passes is still subject to speculation. But fingers crossed that potentially you'll get a 15% basis step up in 28 to pay your 29 taxes if the legislation goes through as currently drafted. Erik, I'm going to cut you loose there. I'm going to post the link to the breakout session in the chat one more time. So Erik, you should click that link now. Appreciate you being here with us today. Erik, always a pleasure having Urban Catalyst as our title partner at these OZ Pitch Day events. Another successful outing for us, I think. So thank you so much.
Thank you, Jimmy. It's always a pleasure to be here with you.